Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Monday, December 29, 2008. It was a quiet day for the fundamental calendar. In the UK, Britons paid off existing mortgages at a faster rate than they took out new ones in the third quarter. Households repaid a net of £5.69 billion. In Switzerland, meanwhile, the KOF leading economic index fell to negative 0.39, lower than forecasts and the lowest the index has been in 5.5 years. Coming out of the weekend, we saw an increase in volatility in the euro-dollar pair compared to the thin trading we saw to end last week. The euro rose during the New York Open to test 1.4310, which was horizontal resistance from December of 19th. The dollar was pressured as fighting broke out in Israel, which spread concerns that Middle East oil supplies will be disrupted. During the rest of the New York session, however, the euro paired its earlier gains, falling more than 200 pips from its intraday high. The fighting in the Middle East helped boost the value of the Swiss franc, as it is a main destination for safe haven flows during times of political instability. The euro-franc pair slid 250 pips in the franc's favor, extending the recent two-week downtrend in this pair to almost 1,100 pips. The franc has taken the mantle as the main destination for investors concerned about increased risk in global markets as well, which has fueled its recent gains. The pound-dollar pair fell 200 pips today, breaking below 1.47 and extending a down move that started around 1.57. Taking a look at the last 2 months, we see that we are at the bottom of a sideways channel with support from the middle of December, a 6-year low. The pound remains pressured by its weak economy and expectations that the Bank of England will have to continue with its bold interest rate cuts. The euro-pound, meanwhile, surged to a new record high, a few pips below the 0.98 level. That continues the rise in the euro towards parity we have been seeing since the beginning of December. Today's action shows the pair breaking out of an upward sloping triangle formation. In the beginning of December, the pair was at 0.825, a difference of 1,500 pips compared to today's price. In New York trading, the euro gave up some of its earlier gains, as we saw in the euro-dollar pair. Turning to the U.S., stocks are down as rising crude oil pressured consumer-related stocks, and the end of the year brought some selling of the worst performers of the year. The weakness in equities hurt the dollar against the yen. The uptrend in the dollar-yen pair that lasted several sessions in the beginning of last week stalled and reversed with the pair breaking below short-term support at 90.30. In our final pair today, the price action in the US dollar-Canadian dollar pair continues to play out in a wedge formation. The pair rose to test 1.2230 but fell back down in later New York trading to 1.21. The Loonie was benefiting from a rise in oil and gold prices, and traders should look for a break of the wedge to see where the pair will go next. Taking a look at some upcoming releases, the UK will post its nationwide housing prices, the Eurozone releases data on private loans and its money supply, and Switzerland will reveal its UBS consumption indicator. Also, Germany posts its preliminary consumer prices data. Tomorrow, the US has 3 releases: the S&P Case-Shiller measure of housing prices, the Chicago PMI, and the Conference Board measure of consumer confidence. And that wraps up our Monday edition of our broadcast. Thank you for joining us today at cmsfx.com, and happy trading.